Hey everyone. I figured I would try this out for a little bit. I was just testing out live videos um, the other day, trying to see if there was a way to do them while screen sharing, and I realized that I can't. But it does appear that this is a great platform to do these sorts of things. Hi Joe, thanks. There's a text live text thing on the bottom, at least on the web, if you're accessing through this. So I figured I'll just start doing some of these live videos. I'll do one and see sort of how it goes. I did a uh, no names idea presentation at the end of the year, just going through 8 of the ideas that I've shared so far here on Substack on Bison Insights, and that was really well received, and a lot of people got to see it. Hi Joe, thank you. Yeah, please go ahead and use the this chat. It's great. It's good to be able to directly interact while we're doing this live, and so um, that was really well received, and then this past week, I did a full idea walkthrough for my paid subscribers, going through the specific 8 ideas so far that I've shared via Substack, via Bison Insights, and then sharing sort of what's changed and updates to the thesis and some of my changed views on oil and gas market dynamics. And so I thought what I'd do is potentially I'm trying this out. Maybe I'll do a series of them, maybe just one. But I thought maybe I'd start talking about one by one live, just ideas that I've shared on Bison Insights on a no name basis. None of this is meant as financial advice to start, but I think I think people tend to have like pretty dogmatic ways of looking at oil and gas companies and at companies generally. And I found that trying to look at things, I've focused on oil and gas companies for a long time, but I'll look sort of across the energy sector and at a variety of different kinds of companies. And I found that looking at things from a variety of different perspectives is actually quite helpful in finding interesting opportunities and then, capitalizing on them, often in times when people are very sort of concerned or scared. And it does feel like this is one of those times where people are quite interested in what's happening in the oil and gas markets. And I think I saw at the end of the year, Goldman Sachs clients, I saw this chart, were more bearish on oil and gas stocks than it looked like at any other time in the history that it's been tracked. And it's possible they were a little more bearish um, during COVID when oil prices went negative, but it was a very, very bearish, very negative measure. And I found that sort of carried through. I think folks are extremely negative on the industry, extremely concerned about oil and natural gas prices. And there's just sort of this persistent view of a super glut. And so when I look at what's been happening this weekend, and this is a Sunday, I'm not even sure if I'm going to record this, send it out or not, or whatever, TBD. But so Sunday, thus the casual wear. And there's a lot of talk. Trump administration on Friday had a meeting with oil and gas executives, and they are really encouraging these large oil and gas companies and some large private oil and gas companies to go down to Venezuela. And the Trump administration reportedly is trying to secure $100 billion of investment commitments. And I think the expectation was that at that meeting, they were going to get those commitments verbally and then be able to announce them, similar to Trump's meetings with various other industries, like when he met with folks in the technology industry or met with SoftBank and some of these other guys and got verbal commitments of trillions of dollars of investment. Again, has any of that materialized? Not really. So I'm not sure exactly what this means or why it's so important to Trump to get these sorts of verbal commitments, or what the consequences are, frankly, for any of the folks that have made them and not followed through. But that did not happen with the oil and gas companies with this meeting regarding Venezuela. There were many questions. There were some sort of embarrassing moments for Trump, like when he asked the CEO of Halliburton when Halliburton left Venezuela, and the answer was in 2019 due to sanctions. And ironically, Halliburton left because they chose to honor Trump's request at the time for U.S. oil and gas companies to leave Venezuela on his sort of strict enforcement of sanctions at that time on Venezuela. And so there's sort of this weird, it highlighted some of the weird bipolarity, I guess, of Trump's energy policies. And again, I think people get sort of too focused on Trump. I know I've posted a lot on Twitter or whatever about his policies recently, but the reason to dwell on that for a minute is that there's this super glut narrative. And when you dig into the numbers, there's not really a super glut of oil or natural gas, both in the US and globally. And so when you point that out to people, they say, oh, well, Trump is dedicated to crushing the price. Why would you bet against the president? Whatever. And so I did put out a recent macro analysis that I put out without a paywall. Just I thought it was really important that people would find it really impactful and relevant. And I think I provided to subscribers first, drop the paywall after a little bit, whatever. But I think there's this real misperception of what it means to have price controls or to have a government try to manipulate prices of things a certain way. And the history is that when you try to manipulate price, most often it actually backfires, especially if you're effectively able to manipulate the price. And so here you have sort of this consensus building that Trump will effectively manipulate the oil price down. And so people are bearish on that. And yet oil and gas stock prices, particularly on the oil side, have been quite strong and actually rising. And I think people have a lot of trouble processing that. And many folks have been pounding the table that, hey, these stocks are expensive or increasingly expensive, concerning, bubble, whatever. And the reality is that it looks like the equity market is starting to look through some of these Trump administration policies, as you would expect, where eventually the impact, I think, is going to be of these policies is going to be much higher prices rather than much lower prices, both because we've had more than a decade of cyclical underinvestment in exploration and delineation on the oil side. And so, here we are more than a decade into a downturn, and we have the US president trying to smack oil prices down more with a sort of very dated perspective of oil prices on the US economy and on US economic activity and so on. So, in that context, I think it makes sense to talk about some of these individual ideas that I've shared and what's changed. And again, none of this is meant as financial advice. You shouldn't rely on anything that you hear or see on the internet, and you should speak to your financial advisor to the extent that you're going to make any sort of investment decision or so on. And past performance may not be indicative. So, the first idea I shared on Bison Insights was in August of last year, and it's a publicly traded oil and gas company that's more focused on the natural gas side, but also has oil operations, and is a post-bankruptcy situation that many folks who are actually quite familiar with the oil and gas industry are still surprised is publicly available, albeit sort of in a gray market. And even in the last week or so, I had folks that signed up and paid to subscribe to Bison Insights and then looked at these different ideas and they were shocked. They couldn't believe that this thing still existed and was, relatively speaking, publicly available. So the big downside with this one is it's not very easily tradable. A set of folks tried to buy it and couldn't, and then another set of folks tried to buy it and could, and the stock is up quite significantly from where I first talked about it on Bison Insights in early August. And the thesis there is really simple. It's that most oil and gas shale plays are in well productivity decline, on at least on a per foot basis. So as these wells have gotten longer and longer, the wells are getting bigger, but on a per foot basis, they're getting smaller. And this company, partly because of the prolonged bankruptcy and restructuring and all kinds of issues and old drama, they're in the core of actually two different big oil and gas shale plays. And they have relatively undeveloped land in areas where there have been enormously highly valued transactions, essentially just for land. And so part of my thesis is that it's really cheap on a liquidation value and relative to some of the parts. And then also that the company itself, because it's on this land that's relatively underdeveloped, as they've come back in and started drilling it over the last few years, they've put up some of the biggest wells in a couple of the hottest oil and gas shale plays. And so, when you drill better wells than your peers, your stock goes up relative to your peers, which is part of my thesis, and that's been playing out so far. And then part of that is that your capital efficiency looks really good. So you're able to grow more than your competitors. You're better positioned for a potential down cycle, and you're able to essentially cost effectively and profitably grow even in periods that are quite challenging. And I understand the sort of irony of talking about this immediately after talking about sort of price suppression attempts by the US government and there's a general downturn in drilling activity, particularly on the oil side here in the US and globally. And so this company happens to be an exception. And I think generally the industry is doing the right thing, which is that as oil prices have fallen, drilling rigs have come off. There's fewer drilling rigs running than there were 2 years ago by a lot. And so I think that does make a lot of sense. But um, in that context, if you are a ultra cost effective developer who has relatively undeveloped assets, it can still be rational to spend some money and develop some of those assets. This company has roughly a 30-year drilling inventory, so it's not like they're depleting stuff that is fully going away anytime soon. And they've actually been able to replace most of the inventory that they've drilled in the last year due to their geographic advantage. They've been able to pick up some small interests that were able to offset a bunch of their inventory depletion. And so it's been it's been great for them. Their stock is up, even though oil and gas stocks are down. And then natural gas has gone into a little bit of a surplus recently. And I'm a lot less bullish on natural gas for 2026 due to poor weather, as well as persistently high production and sort of an air pocket in terms of new LNG facilities coming on and ramping up, or expansions getting ramped up in this year relative to last year and next year. And so I think this could be a little bit of a tougher year for natural gas. Watch, there'll be some big snowstorm or something, and it'll completely change the balances. But subject to the current sort of consensus forecasts for weather and the current development trajectories and so on, as well as past behavior by different operators, it does look like it'll be a little tougher for natural gas. We've started to see the natural gas producer equities, the consensus ones that you'll read all over and see all these different famous fund managers and various other folks who are piling into and telling you how great they were, and their CEOs are on CNBC all the time and all this stuff. These have started to fall, but still are trading at quite elevated levels versus a reasonable expectation of natural gas prices for 2026. And in some cases, these companies are relatively underhedged. And in at least one case, they have a significant amount of financial leverage. And so, in the context of what could be a very, very weak gas market, both for the realized price for natural gas for these producers as well as for their equities, this particular first idea on Bison Insights, and again, it's quite hard to buy. So there's a decent expectation that if you're listening to this and you sign up and you go to look at it, you might not be able to buy it. But some folks have been able to. And then also, I think just this idea of looking beyond sort of what you see in the Wall Street Journal and Barron's and CNBC and whatever in terms of like the top stock ideas. I think it's sort of inspiring to see, ideas. I get inspired when I see other folks find off the run things like this. It's a good inspiration to go do more work myself, try harder, find more interesting ideas that could potentially be quite insulated from broader oil and gas markets. I know that's sort of famous last words, but I think it actually do quite well from here, even in the face of weak natural gas prices and prospectively weak natural gas producer equities. They've historically bought back stock. They could actually potentially start paying a dividend. The amount of free cash flow is astronomical if they were just spending maintenance capex. They are spending a lot of money to grow. Their growth rate is extremely high, which is, again, I don't know if that's like the typical kind of investment of the kind of company I invest in, but it's pretty fun to own something that's growing as fast as this thing is. And especially when it's trading at around half or less of the cash flow multiple, the EV to EBITDA of some of its peers, and where it looks like peer leading free cash flow relative to its market cap and EBIT and enterprise value, at least compared to the other natural gas focused producers. So anyway, I really like this idea. I think it's a really interesting dynamic market for oil and gas right now. There's a lot of controversy. I will say, I'm sure if you're listening to this, you've probably seen some of my social media posts. I did actually vote for Donald Trump. I thought he was the least bad of the two candidates. So I'd like to think I don't have, what is it they call it, Trump derangement syndrome or anything like that. None of my posts are sort of meant as any sort of political commentary in the sense of endorsements or opposition to particular political leaders. I am very opposed to government intervention in the economy. I think that the path to prosperity is through deregulation, through the enforcement of contracts and the enforcement of laws, but deregulation and reduced taxation and allowing the dynamism of entrepreneurship and of capitalism to shine through and generate substantial economic activity, which leads to economic growth and broad prosperity over time. And so I am opposed to efforts that are sort of diametrically opposed to that, whether it's from a Democrat or a Republican. And my view was that Trump would do less sort of government intervention in the economy and via sort of extra government activities or nationalizations or whatever. I was wrong. It's gotten worse, not better. I don't know if the other candidate would have been even worse than this. Hard to tell, but I just, the point of pointing that out is just that, this isn't some sort of weird political motivated thing. Honestly, at this point, I don't know. I'm not sure which political party is going to whatever. It's more about just analyzing the specific policies and the specific likely impacts of those policies. And then where I have an idea, I'll share it into the void. And in most cases, I'm sure they're just completely ignoring my analysis. I think higher oil prices are good for the US economy, for example. We are a net exporter of petroleum products and NGLs, and those prices are directly tied to oil prices. So higher prices are good. No one wants to pay more when they go to the gas pump, which could be affected where we could just lower the federal gas tax and lower state gas taxes to accomplish a lower price at the gas pump while simultaneously allowing the US economy to grow more by having higher oil prices. No one cares. No one listens. They look at it. They say, oh, it's wrong. They ignore that. I'm basically just piggybacking off of a study that Ben Bernanke did in 2016, back when we used to produce even less oil and natural gas. And so the case in favor of U.S. economic growth from higher oil prices is better now than then. I'm not sure that anyone thinks that Bernanke is a particularly big Republican or Democrat. I think sort of a technocrat. Was he good or bad? I don't know. But I think his analysis was compelling on higher oil prices. And so I come at it from that perspective. I think there's a really interesting set of opportunities right now in the oil and gas market. I think there's a lot to share and a lot to find. And whether it's through Bison Insights and coming and joining and checking out some of the stuff that I'm doing on there, or whether it's through your own research or finding other folks or hiring an advisor or whatever it is that you're doing to find these ideas, I think that the next 5 years for oil and gas looks a lot more promising than the last 10 or 11 years for oil and gas. And I think it's going to be one of those things I put in this longer presentation that, if you look at gold miners and how much people hated them a couple years ago and how they were basically anathema, and there was this sort of running joke of a gold mine is a hole in the ground with a liar standing next to it. I think there's similar, maybe even more negative sentiment towards oil and gas. I think the energy sector, which is primarily oil and gas producers, is at, and oil majors, is at about 3% of the S&P 500. I posted this on Substack and Twitter or elsewhere. The earnings related to the energy sector are close to 10% of the S&P 500. And so massively underowned, massively disproportionately represented in the indexes. And I think as you get smaller, some of these companies are even more compellingly valued and could sort of slingshot where, if there's 2 or 3x available in some of these large producers that are sort of constituents of the index, maybe there's 10 or 20x type opportunities on the small cap side. And I've endeavored to find those. I own them in my day job. I own them professionally, and I have a significant research effort to try to find them. And then here on Substack, I share some of these ideas. basically have been sharing one idea a month and sharing updates and doing expert interviews and other stuff like that. It's been super fun. It's great to get to do this. I think I'm going to close this up in a second. And so I appreciate your time. And I may be sending this out. Thank you for all of the comments and for your participation in this on a Sunday afternoon. And hope you have a great day and a great weekend. Take care.